Hi students, this is Chandrakant Arkeri, Assistant Professor, Department of Commerce, Government First Grade Women's College, Bailhangal. So, as requested by many students of Rani Chennamma University, before examination, I am trying to solve 2024 question paper, that is Corporate Accounting, to help all the students. So, this is basically a live class on my YouTube channel. So, I request all the students who are interested to know the solutions of the corporate accounting, they can watch this video. So give me a few seconds so I can check whether my class is on live on my YouTube channel or not. So give me some seconds. Give me 1 minute, students. One minute. Huh? Yeah, right. Yeah, right. The class is on live. So thank you for giving me some time to check my YouTube channel. So let's start the class. So the camera setting and everything is correct. So now we'll going to start the class. So thank you students for your support. So please share this video to your other friends also, so they can also join online. And if you have any comments, you can comment in live also. Otherwise my WhatsApp number is this one, 99023823995. If you have any other question paper also relating to this corporate accounting, you can share, and before your examination I will do that solution also. So let's start the session. Okay, so these are the all 2 marks questions. So what is underwriting commission? So for your purpose I put some theoretical questions also. Whatever question are appeared in your 2024 question papers, that all problems or theory classes, everything is covered in this session. So first you have around 7 questions of 2 marks questions, and in that you have to write only 5 questions. So you will have a 10 marks for this section A. So what is underwriting commission? An underwriting commission is a payment made to underwriters for the risk they take on when underwriting a company shares. I setting my camera, so that's why so little disturbance is there. Okay. Okay, let's start. Okay, so the commission which was paid to underwriters to sell the company's shares, that is called an underwriting commission. So this is also underwriting of sales, from that this question was appeared. Again, from this same chapter, one more question: what is partial underwriting? Partial underwriting is when an underwriter agrees to sell a portion of a total issue of securities and to purchase the remaining securities if the issue is under subscribed. So he is not taking all the liability on him. So he is taking only partial underwriting to sell the sales. So that is called as partial underwriting. Write two expenses which are allocated on sales ratio: commission, sales and distribution expenses we can write, or advertisement you can write, and many expenses are there on the basis of sales ratio. In your section D also some questions are appeared on this. So there also you are going to distribute some expenses on sale and on sales ratio. Okay. Give the meaning of intangible assets. Everybody know this answer. Intangible assets are non-physical assets that have a value to a business. They lack physical substance and cannot be touched or seen. Goodwill, patent, copyright, etc. is the example for intangible assets. Okay. So what is super profit? Super profit is the excess of actual profit over normal profit. So you may be aware of this question is from valuation of goodwill. Super profit means actual profit minus normal profit. The formula also you can write and you will get a good marks. Then what do you mean by yield method? So this is the valuation of shares. There are some methods. So that also I have given in this one question is there for 5 marks, which are the type of valuation of shares. So in that also we are going to discuss. The yield method is a method of valuing shares based on the rate of return or dividend rate. So in yield method you are considering rate of return or dividend rate. On that basis you are calculating the value of shares. That is called an yield method. Then how do you treat advance tax paid in financial statement of companies? So advance tax is not an expense. It is considered as an asset and adjusted against one's tax liabilities at the time of finalization of balance sheet. It is a charge on income and not considered as an expenditure. It is shown under loans and advances in the balance sheet. So this is final account question, and note you have to mention this. So advance tax. So these are the some 2 marks questions. All the questions answers I am giving in this. So please practice it and get full 10 marks in this section A. So you can have many other 2 mark questions also. So that also you please refer. I can't assure that this question will be appeared in 2025 question paper also. So you please see that which are the important 2 marks questions are there in your 5 chapters. So you make it a note and before going to exam you just glance it. Okay. So let's see the next question. Okay, so answer any 3 of the following. So you have in section B you have 5 questions. In that you have to solve 3 questions. So each carrying 5 marks. Okay. So maximum questions are problematic only. Maximum questions are problematic only. 1 minute, students. Maybe my this camera setting covering some portion of, so little bit I'll make it small. So you will have a full access of. Okay, now it's clear. Okay, students. Okay, X and Company Limited issued 50,000 equity shares of rupees 10 each. 10 each. The whole of issue was underwritten as follows. So see students, in underwriting of shares only you have 2 questions in 2 marks and 1 question 5 marks question is there, and 10 marks question is also there in this question paper. So you should be aware how much marks this one chapter has covered. There 4 marks, here 5, then 10, around 19 marks questions are appeared from underwriting of shares only. So don't leave this chapter. It is very easy chapter also. So you can easily understand this chapter, and my full video is also there in my YouTube channel. Underwriting shares. One session is there for 5 marks questions and another session is there for 10 mark questions also. Around 5 years questions I covered. So basically I am teaching for Akamadevi Women's University Bijapur, but syllabus is same and questions which are appeared from our university also and Rani Chennamma universities also, both are similarly same questions problems only. So you can refer that if you want more questions particularly on underwriting of shares. 2 videos are there in my YouTube channel, 5 marks questions and 15 marks questions. So there also you can cover. Okay. X company limited issued 50,000 equity shares of rupees 10 each. The whole of the issue was underwritten as follows. The whole of issue was underwritten as follows. A 40% shares, B 30% shares, and C 30%. So portion which A has took and B has took and C has took from this 50,000 shares. So this is a complete underwriting, because if you add 40 plus 30 plus 30, it is 100%. So 100% means all 50,000 shares will be sold by A, B and C in the proportion of 40%, 30% and 30%. Okay. The applications issued by the company were rupees 40,000 shares in all. So company has received application 40,000. Okay. Out of which the application of 10,000 shares had the stamp of A. This is the marked application. So in 10,000 shares, A's mark is 10,000. Then those for 5,000 shares B and 10,000 shares that C. So these are all marked applications, and whatever remains in application received, that is called as a unmarked applications. Marked application means the underwriter stamp is put on the applications, and unmarked application, there is no stamp of any underwriter in unmarked applications. So these questions, marked what is the meaning of marked application, what is the meaning of unmarked applications? So two marks questions may appear in this year also. So please note this also. So marked applications means the stamp of the underwriter has put on the applications. Unmarked application, there is no stamp of the underwriters. Like that also you can write in your answer sheet. Okay. What they ask, determine the liability of underwriter. Okay. Calculation of underwriter liability. C. Calculation of underwriter liability. So this is the statement, you have to make it. So particulars A, B, C and total. So first you have to distribute gross liability. So gross liability, how you are going to distribute? Total 50,000 shares are there. So you take your calculator. So total 50,000 shares are there. So 50,000 shares into 40%. A is agreed to sell the 40% shares of 50,000. So that is 20,000. Then B 30%, C 30%. So 50,000 into 30%. So that is 15,000. So total their gross liability is 50,000. In that A liability is 20,000, B liability is 15,000, C liability is 15,000. Then less marked applications. So first you have to minus the marked applications. So A, in the name of A, total marked applications are 10,000. It is given in the problem. And now you can watch live also. Later that this video will be there in my YouTube channel also. There also you first see the problem, then you solve it, then you see the video. Okay, like that also you can make it. Then B marked applications are 5,000, C's marked applications are 10,000. So you are minusing this. So total 10,000, 10,000, 5,000. So next there is a unmarked applications. There will be a unmarked applications. So that applications were calculated like this. So distributed on the basis of underwriter's liability. See, total unmarked applications. So total applications are issued out 40,000. Total in question paper also you can see. Total applications issued of 40,000. In this mark applications are 10 plus 5 plus 10. Total 25. Minus 25,000 is the mark applications, equal to 15,000 is the unmarked application. This working note you have to make it. So maybe I have done in second slide, I don't know. So you will see that. So unmarked application, how you are going to calculate? Total applications minus marked applications equal to unmarked applications. This unmarked applications you have to distribute on the basis of 40%, 30% and 30%. So I made it 4:3:3 ratio. Like this also you can make it. Otherwise you can directly put 40%, 30%, 30%. So 15,000 into 40%, that is 6,000. Then again same 50,000 into 30%. So that is 4,500. then C 4,500. So you are minus the unmarked applications also. So now actually what is the liability of underwriters? So that 10,000 minus 6,000, 4,000, 10,000 minus 4,000, 5,500, 4,500, sorry, 5,000 minus 4,500. So this is the total underwriters liability. So this marks appear for 5 marks question. So it is very easy question, and within 5 minutes you can going to solve this type of questions. So only thing you have to see that first you have to see the how much gross liability is there. This is the first step. Second step, you have to calculate the unmarked applications. How you are going to calculate the unmarked application? Unmarked application is equal to total application received minus marked applications. Total applications received minus marked application equal to unmarked applications. So like that you have to calculate. Then unmarked applications should be distributed on the basis of the gross liability of the individual underwriters. That also you should remember. So many students, which I have seen in my classes also, many students are making wrong in distributing the unmarked applications. So first you have to know the gross liability ratio, then on the basis of gross liability ratio you have to distribute this unmarked application. So this is the simple question and very easy question, and easily you can get the 5 marks. So let's see the next. What is the time ratio? So this is also profit prior to incorporation. This question is from profit prior to incorporation. What is time ratio? Give the example of expenses which are allocated on the basis of time ratio. You can give 5 examples on this. Time ratio is a comparison of 2 time periods or durations. So otherwise you can give an example also. If you don't know how to form the meaning of time ratio, that time you can write prior period is this much and after period is this much. So the whatever ratio you are calculating for after and before, this is called as a time ratio. That like also you can write. So time ratio is a comparison of 2 time periods or durations. The following items are allocated on the time ratio: salaries, rent and taxes, general expenses, depreciation, postage, printing and stationery, etc. So this is the third question. Very easy question, you can write easily. Okay. Next, from the following particulars of PQR Company Limited, calculate the goodwill under simple average profit method. It's a very easy question which was appeared in 2024. So you can expect similar questions. It may in 2025 you can have a weighted average method also, or yield some other method also, like annuity method. So like that you can have a questions on your question paper. So you practice it, and again I am requesting all the students. So these all 5 chapters, 5 marks question and 50 mark questions already uploaded in my YouTube channel. So that class are in Kannada and English, and this class I am taking in English only. Okay. So I am consulting many rural students also. So this may be every student has to write in English only. So there is no much problem to understand this type of problems. So if anybody Kannada medium students are there, they can watch my all these 5 chapter videos in my YouTube channel. All 5 chapters are already uploaded in my YouTube channel. So go through that videos before the examinations. I assured, if you watch and if you solve that questions, definitely your score will be more than 80%. So many students, my students or other college students also scored more than 80% in, and my college students are around 20 students have scored more than 90, and out of 23 students have scored 100 of 100. So I am assuring that if you watch my YouTube channel, these classes, definitely you will score more than 80. So only thing, you should work hard for this. Okay. So let's see, from the following particulars of PQR Company Limited, calculate the goodwill under simple average profit method. So students, one thing I forgotten to tell you, in question number 2, there is a working note, you have to make it. Most probably I missed that working note. You have to make a working note for that. What is that working note? Calculation of unmarked applications. So in that you have to write total applications received is 40,000 less marked application A 10,000, B 5,000 and C 10,000. So equal to 25,000, remains 40,000 minus 25,000 remains 15,000. That is the unmarked application that you are going to distribute on the basis of the underwriter's gross liability. Okay, let's continue. Fourth question. From the following particulars of PQR Company Limited, calculate the goodwill under simple average profit methods. So year 2019 90,000, 2020 60,000, 2021 72,000, 2022 66,000, 2023 72,000. It was decided to value the goodwill of the company on the basis of 3 years purchase of average profit of the past 5 years under simple average profit method. So around 6 questions are there, 5 marks questions in my YouTube channel also, that also you can watch easily. Okay, so let's see the solution. It's very simple, I can say. It's very simple. It's very simple means very simple. Only thing you have to add this all profit divided by 5, you will have a simple average profit, then into 3 years purchase. It's very this problem you can solve within 2 to 3 minutes only. It will not take too much time. Only thing you have to add this. See solution. Calculation of average profit 2019 90,000, 20 60,000, 21 72,000, 22 66,000, 23 72,000. In my previous video also, you have a video in my YouTube channel also. So some year there will be a loss also. Most probably in 2021 there is a loss. So that you have to minus it. Then you have to get the average profit. So some questions are there on that also. So we don't know if some questions may come on that also. In some year there will be a loss also, that you have to minus from your total profit. Okay, so average profit equal to total profit divided by number of years. So total profit is 3,60,000, number of years is 5, so equal to average profit is 72,000. Then goodwill equal to average profit into number of years purchase. So 72,000 into 3, total 2,16,000 is the goodwill. So see how simple questions they are asking to you. So many students think that corporate accounting is very tough, corporate account is very tough. Don't think. Okay, so it's very easy chapter. Only thing you should practice the problems. So again I am requesting, all chapter videos are there, 2 sessions each, 5 marks question, 10 or 15 marks questions. So you can watch in my YouTube channel also. So that will also surely will help you. Next question. So again there is a theory. So many students are not interested to write the theory classes. So there is a combination in section B. There is a combination of theory as well as problem also. So 2 theory they ask and 3 questions they ask. So those students who are interested to write the theory classes, they can write the theory. Those students are interested to write the problem, or those interested to solve the problem, they can solve the problems also. Okay, so explain the methods of valuation of sales. These are the methods where you can calculate the valuation of sales. So I am not going in detail, so you can have in textbook also. Just I am mentioning the what are the methods are there for valuation of sales. Okay, so methods of valuation sales. Net asset method is there. This is very important. Yield method is also very important. Then fair valuation of method. These are all very important. So in this year 2024 question paper, you have a 15 marks case study on 10 marks questions on fair valuation of method. Okay, so this I am going to explain in that when the questions appear. So in yield method you have a 3 methods. One is valuation based on rate of return, valuation based on price earning ratio, then valuation based on productivity factor. In valuation based on rate of return, again we have a 2 method, that is valuation based on rate of dividend, then valuation based on rate of earnings. So these are all methods for valuation of sales. So if you want any details, you can refer your textbook. In that you will have this full theory of these methods. Okay, so in this video I am not covering the explanation. Okay, only I mentioned the methods. Okay, next see the 6th question. Okay, prepare the statement of profit and loss as per part 2 of revised schedule 6. So now if you see the amended books or Schedule 3 you are preparing as per the Companies Act 2013. We are preparing our balance sheet and profit and loss statement on the basis of the Schedule 3. Okay, so here they have mentioned Schedule 6 also. It is the earlier schedule. Now the schedule was changed, that is Schedule 3. So they asked us to make the statement of profit and loss. Okay, given some. So otherwise you have a 5 marks questions on the basis of calculate the note to reserves and surplus or tangible assets note. So like that questions also comes in your question paper. So this type of questions I covered in my YouTube channel also. There is a 2 sessions in this chapter also. Final account chapter also there are 2 sessions are already uploaded in my YouTube channel. You can type Chandrakant Arkeri final accounts, corporate accounting. So you will have a 2 sessions and you will have a playlist also, corporate accounting playlist also there in my YouTube channel. So that you share with your student, your friends of RCU as well as KVD or as well or Gulbarga University, any university where this corporate accounting chapter is there. Okay, so easily you can share it. So prepare a statement of profit and loss as per part 2 of revised schedule 6. Revenue from operations is 20 lakhs, other income is 2 lakh, cost of material consumed is 15 lakh, employee benefit it's not example, employee benefit expenses. Make a correction, employee benefit expenses 3,20,000, then tax expenses 1,80,000. Tax expenses 1,80,000. Okay, let's see. Very simple. Statement profit and loss as per part 2 schedule 3. So I changed here. It is not schedule 6, it is schedule 3. Particulars, note, amount, total. So this format you should know. So I request students write the format. First you should practice the format, because in schedule 3 the serials should be same only, 1 2 3, whatever format is given in the book, that format only you should follow. Okay, so particulars, note, amount, total. So revenue from operation is given in note 1, that is here there is no note, necessary not to make any notes, directly we can write it. Revenue from operation is 20 lakh, other income is 2 lakh. So total income is 22 lakh. So total income is 22 lakh less expenses. Cost of material consumed is 15 lakh, employee benefit expenses is 3 lakh 20,000. So total expenses is 18 lakh 20,000. So profit before tax is 3 lakh 80,000. So tax expenses is there, that is 1 lakh 80,000. So profit after tax is 2 lakh. Very simple problem. Only thing you should know the steps how to make it. So first revenue from operation, other income you have to add it, then minus expenses, whatever expenses is given, some finance cost is also come, cost of material consumed, employee benefit expenses, then total expenses 18 lakh 20,000, profit before tax is 3 lakh 80, then tax expenses you are minusing, then you will get a profit after taxes, that is 2 lakh rupees. So this is the 6th question. So students, I covered section B, all the questions, all 6 questions. Okay, in that you have to write only 3 questions. For the benefit of the students, I am covering all the 6 questions. So in this session I am going to solve all full question paper, whatever questions are appeared in your question. I am a teacher, I don't have any options, but as a student while writing your exams you have options to write the answers. Okay, you make first, you select which questions are very easy for you, then you go for the solution. Okay, so now we are going to complete all the 6 questions. So you took around 30 minutes to cover all your section A and section B. So in another 30 minutes or max will take around 35 to 40 minutes, we will cover other section C and section D, 10 marks questions, and last case study 15 marks questions. So 2024 question is very easy, and within 2 days or 3 days before your examinations I am going to solve your 2023 question paper also. So that is also a live session only. So already students have shared the 2023 question paper to me, so I am working on that. Once the all solutions are ready, once PPT is ready, immediately I will took a class in my YouTube channel also. Okay, so please watch my YouTube channel, and please inform your students also. Not only corporate account classes are there in my YouTube channel, you will have many other practical papers videos in my YouTube channel. Around 200 videos are there. So financial accounting, costing, GST, some question papers solved on income tax also, financial management also, some questions solved in management accounting also. So many practical papers classes are available in my YouTube channel. So please share it to your friends also. If anybody is not subscribe my YouTube channel, you please subscribe my YouTube channel. So in regular basis I am going to start maximum practical oriented subjects classes in this YouTube channel. Okay, please go through that, and don't worry about sir, your university is different and my university is different, so don't think in that way. So same syllabus will be there, the chapters will be same, so they may be changing some chapters here and there. So whatever applicability is there as per your syllabus, you go through that videos, so it's very beneficial to you also. So I have seen many colleges doesn't have sufficient uh, teachers, and there is a problem for appointing in guest faculties also. So for them, considering that type of students or any other students also, so I am trying to help the students, and this is not giving any benefit to me. So only thing, it is a help, and it's my satisfaction, that I'm helping other students also, sitting at in front of laptop, sitting in one place and helping to other students also. Okay students, have a 1 minute break to drink some more water, then we will only 1 minute we will start our next section, that is section D. Okay, answer any two of the following. Sorry, I told three questions. In this you have around 4 questions or 5 questions. In that you have to solve only 2 questions. So take 1 minute break. Okay students, let's start the section C. So where you have 4 questions, in that you have to solve 2 problems or 2 theoretical part also. So you'll have a 20 marks over here. So again there is a question on underwriting of sales only. So in this underwriting of sales, again I am requesting you can watch 2 sessions which are there in my YouTube channel, 15 marks sessions. So same questions are solved in there also, different problems. Boost Company Limited issued 2 lakh shares. Boost Company Limited issued 2 lakh shares. 1 minute. Students, if you have any comments, you can comment in my YouTube live session also. So otherwise you can WhatsApp me. So there also you will see. Okay, let's see. Boost Company Limited issued 2 lakh shares of rupees 100 each. They were underwritten as follows: Mr. X, Mr. Y, Mr. Z. So directly they are given the how much liability they took. So on this basis you have to calculate the gross liability ratio. Why you are going to calculate the gross liability ratio? Because to distribute the unmarked applications. Okay. So here there is a firm underwriting also. So firm underwriting means two marks questions may come on what is the meaning of firm underwriting. So firm underwriting means the X, Y, Z are agreed to take 16,000, 20,000 and 6,000 in their name only. So that is called a firm underwriting. Firm underwriting means they are ready to take this much shares in their name only. They are not going to sell to other people. Okay. So there is a firm underwriting also, that is X 16,000, Y 20,000, Z 6,000. So the total applications excluding firm underwriting but including market applications were for 1 lakh shares. So the applications received is 1 lakh. Then the marked applications were as follows: X 20,000 shares, Y 25,000 shares, Z 10,000 shares. So determine the liability of underwriters assuming that the benefit of firm underwriting is given to underwriting and unmarked applications are distributed in the gross liability ratio. So in this year in 2025 question 2025 question paper, there may be a question on this basis only in that benefit is not given. Like that also they can ask the questions. There is a difference between benefit of firm underwriting is given, benefit of firm underwriting is not given. So that type of questions, that type of solutions are also available in my YouTube channel. There you can find, recently I made 2 videos on this. So there also you can find this type of questions. Firm underwriting is not given. So that time what methodology you have to follow? When the benefit of firm underwriting is given, what methodology to follow? So the difference also is explained in my earlier YouTube classes. So there also you can watch if you want. Okay. Here in 2024 question paper they asked benefit of firm underwriting is given. How the solution will be there, we'll see in the next slide. Okay. First, whatever working notes you have to make, that you have to keep it in your mind. Okay. Otherwise what happen? Otherwise what will happen? You will see, if you don't do that working notes, it's very difficult to solve this type of questions. So first see what are the working notes we have made it here. So if the benefit of firm underwriting is given, so this first we have to calculate the unmarked applications. So in 5 marks questions also this is very important. You have to make a calculation of unmarked applications. Then if gross liability ratio is not given, that you have to do the calculation. So here calculation of unmarked applications, number of applications received is 1 lakh. So again in earlier question also I have explained you how you are going to calculate the unmarked application. Unmarked application is equal to number of applications received minus marked applications. So number of applications received is 1 lakh less marked applications X 20,000, Y 25,000, Z 10,000. Total 55,000 is marked applications and unmarked applications are 45,000. Okay. So in benefit not given, again you are going to add that firm underwriting to unmarked applications. Then you are going to distribute that on the basis of gross liability. That is the major difference. Here benefit is given directly, whatever they are agreed to take back, that directly you are mentioning X is this much, Y is this much, Z is this much. But in benefit is not given, that whatever firm underwriting are there for individual name, that you are going to add back to unmarked application and total will be distributing on the basis of the gross liability ratio. So that type of questions are available in my other YouTube classes. So there you can watch it. So in 2023 if benefit is not given question, problem will be there, that also I am going to solve easily. So the next working note is calculation of gross liability ratio. So here X 1,20,000, Y 50,000, Z 30,000. So on this basis I am calculating the gross liability ratio. So 40 has gone, 40 has gone, 40 has gone, 12:5:3. So it's very difficult to again divide this because 5 in 5 table 12 is not come. In 3 table 12 is there but 5 is not there, so I am keeping 12 is to 5 is to 3. So these two working notes are very important. Before making a statement of calculation of underwriter liability, first you should do these two working notes. One is, if in the problem gross liability ratio is given, not necessary to make a calculation. If it is not given, you have to make a calculation. Then calculation of unmarked applications. This is very important calculation. So let's see the statement. Calculation of underwriter's liability. Particulars X, Y, Z total. So total gross liability. So total gross liability is given in the problem, that is 1,20,000 in the name of X. Y has took 50,000 liability. Z has took 30,000 liability. Okay. Less marked applications. So marked application is also given in the problem. First, this is the first step. First we have to enter gross liability less marked applications. So 20,000 X, Y 25,000, Z 10,000. So next we will be having 1,25,000 and 20,000, total 1,45,000. Less unmarked applications. So sorry. So unmarked applications distributed on gross liability ratio, that is 12 is to 5 is to 3. So 45,000 unmarked applications we are going to distribute on the basis of gross liability ratio. So that is 45,000 into 12 divided by 20, 45,000 into 5 divided by 20, 45,000 into 3 divided by 20. So that is 27,000, 11,250, 6,750, total 45,000. So again, sorry, 1 minute. Okay, see here. So 73,000, 13,750, 13,250, then 1 lakh. So less firm underwriting. So less firm underwriting, that is 16,000, 20,000 and 6,000. Then you will have a liability 57,000 and there is a surplus in Y. So Y has received more applications, minus 6250. Then Z having liability 7250. So this is best question. So this whatever surplus is there in Y account, that has to be distributed to others underwriters, those having liability. So 6,250 you are going to distribute in their gross liability ratio X and Z, that is 12 is to 3. Surplus application of Y is distributed to X and Y in their respective gross liability ratio. So this 6250 are going to distribute 12 is to 3, that is 12 divided by 15 and 3 divided by 15, that is 5,000 to X and 1250 to Z. So Y is having surplus. This surplus we are going to distribute to X and Y, X and Z, because they have a liability also. So that's why we are going, again we are helping to them. Then their liability is 52,000 and 6,000 remains. Then again you have to add back firm underwriting. So definitely you will come to know how much is the actually total underwriter's liability. So why you are making here less and why you are making add back here? Because you are minusing here to know their liability, if any surplus is there or their liability is there. So if any surplus is there, then again you have to distribute to other liability holder. Then whatever firm underwriting is there, that you have to add back, that is 16,000, 20,000, 6,000. So totally you will come to know that total underwriter liability, that is 68,000, 20,000 and 12,000. This is the total underwriter liability. So this is the firm benefit is given. Firm underwriting benefit is given to underwriters. In this situation you have to solve, you have to make a statement like this. Okay, first step, again if you write down the steps, what are the steps are involved while calculating the underwriter liability, you note down. I'll explain one by one slowly. First step, you have to calculate the unmarked application. That working note you have to make it. Then second step, you have to calculate gross liability ratio if it is not given in the problem. That is the second step. Then you are going to do the calculation of underwriter liability statement. So in that, first you have to enter gross liability, that is the third step. Then less marked applications which are given in the problem. Then less unmarked applications. So this unmarked applications you have to distribute on the basis of the gross liability ratio. Then fourth steps, firm underwriting, less firm underwriting. So you are going to minus that also. If any surplus is there in any underwriter account, that you have to distribute to other underwriter who is having the liability. So in this situation, in this problem, Y is having surplus of 6250, that you are going to distribute X and Z in their respective gross liability ratio, that is 12:3. This is the next step. Then again you have to add back firm underwriting. Again you have to add back firm underwriting. Then you will come to know the total underwriter's liability. These are the simple steps in calculating the underwriter liability. It's very easy. Problems will come in your question papers. Okay. So if you want, again I am requesting you, if you want benefit is not given problems, you go and watch my other sessions also appear is there in my YouTube channel. There I explain around 2 to 3 problems we did on benefit is not given, and one problem is there, you have to calculate the commission. Then you have to know their underwriter liability on value basis also. Here we are calculating on the basis of the share. In one questions which you have solved in my other classes, you have to calculate the underwriter commission, that you have to adjust with their liability also. So that question is also then, so you please go and watch that question also. Okay. Next problem. Calculate the fair value of shares of RCU Limited from the following balance sheet as on 31/3/2023. So students, again I am requesting you. So valuation of share, explanation of method, and for each method I have solved some questions also is there in my YouTube channel. So you go and watch there also. 5 marks questions and the explanations. What is the meaning of net asset method? What is the meaning of yield method? What is the meaning of fair method? So everything is explained in my that class, and also around 2 to 3 questions you have solved in each method also. And after that you have solved 15 marks questions also. So this is very simple problem, but only thing you should know the formula over here. Each method having some formula, on that basis you have to calculate the fair value. So fair value is having two methods. One is intrinsic value and another one is yield method. So first we have to calculate value of shares on the basis of intrinsic value, that is net asset method. Then you have to calculate yield method also. Then you have to add it, then divided by 2. Average of intrinsic value plus yield method, you will have a fair value. So I will show the solution, don't worry about that. Only thing, this type of questions will appear for your 10 marks question. Calculate the fair value of shares of RCU Limited from the following balance sheet as on 31/3/2023. Capital and liabilities, 10% 16,000 preference shares of ₹100 each, that is 16 lakh. 40,000 equity shares of ₹100 each, 40 lakh. 40 lakh. Then reserves and surplus 12 lakh, 10% debentures 8 lakh, current liabilities 4 lakh. So total is 80 lakh. Then additional information, properties and assets, sundry assets 76 lakh, then preliminary expenses 4 lakh. So additional information, normal rate of return is given 15%, average profit before tax is 5,20,000, rate of tax is 30%, transfer to reserve rupees 1,60,000. So this is the question, very best question which has appeared in valuation of shares. So this type of question you can find in CA, CMA as well as CS also. So let's see how this question is solved. First step, see, calculation of value of net assets. So first, on the basis of intrinsic value. Intrinsic value means calculation value of shares on the basis of net asset method. First we have to identify the net assets. How we are going to identify the net assets? So on the basis of this net assets, you have some problems in my other class also, so that are already uploaded in my YouTube channel. Okay. Market value of assets, sundry assets is 76 lakhs. So in that we have to minus outside liabilities and preference share capital also. So current liability is 4 lakh, 10% debenture is 8 lakh, then 10% preference share capital is 16 lakh. So these are all outsiders liability only. So you have to make a payment of this. Then you will come to know net asset available to equity shareholders. So whatever remains, that belongs to equity shareholders. So sundry assets minus outsider liability, you are going to minus it. Then you will come to know net asset available to equity shareholders, that is 48 lakh. So calculation of intrinsic value per share. Intrinsic value of share equal to net assets available to equity shareholders divided by number of equity shares, that is rupees 48 lakh divided by 40,000 shares. This was given in the problem. So net assets available to equity shareholders we have calculated on the basis of assets minus outsiders liability. Okay, in this, which things you have to cover as a outside liability and which things you have to cover as a assets. So this was explained in my other videos which are uploaded in my YouTube channel. If you want more explanation how net asset method is to be followed, that is there in my other videos. There you can follow, because see, your exams are now most probably from 15th onwards your exams will be there. Maybe corporate accounting is on 29th as students inform me. So I thought that all 5 chapters you are covered. Only here I am going to explain how 2024 questions are going to solve. So I am not going to explain each method how it will be followed and so if you want that type of explanations, you can go and watch my other videos which are there in my YouTube channel. You will find it easily. Okay, so first we have calculated the intrinsic value of the share. How intrinsic value of the share is calculated? It is based on the net assets. Okay, next calculation of profit available to equity shareholders. So here on the basis of yield method also you have to calculate. So average profit before tax is 5,20,000, less tax at 30%. So average profit after tax is 3,64,000. So 5,20,000 into 30%, that is 1,50,000 you have to pay the tax, because average profit is given before tax. So after tax 30% you have to minus it, you will get to know the average profit after tax. So from this you have to make an appropriation. From this profit you are transferring to general reserve, that is 1,60,000, that is 1,60,000. So total profit available is 2,04,000. In this, first preference will be given to preference of shareholders. Their dividend first we have to distribute. So their 10% dividend is agreed on 16 lakhs. 16 lakh into 10% is 1,60,000. So first we have to give dividend to preference shareholders. So whatever balance remains, that is 44,000, is belongs to profit available to equity shareholders, that is 44,000. So there is a two methods in fair value. There is a two methods are involved. One is intrinsic value, one is yield method. So that's why this much calculation you have to make it. Okay, so calculation of expected rate of dividend. So dividend base we have calculated. Expected rate of dividend equal to profit available to equity shareholders divided by equity share capital into 100. So how much dividend percentage you can give to equity shareholders? So that is profit available is 44,000 divided by 40 lakh dividend is there. So total 1.10% dividend you can distribute to equity shareholders. So on this basis again you are calculating the calculation of yield value per share. Value per share equal to expected rate of dividend into paid up value of shares divided by normal rate of return. So here normal rate of return you are considering over here. Then you are calculating the value per share on the basis of yield value per share. So that is 1.1% is there. That is you have to take directly 1.1 into 100 divided by 15. So what is this 100? 100 is the paid up value of share. So that you have to take it. Then this is the expected rate of dividend which you have calculated in our previous slide, that is 1.1%, that we are directly mentioning 1.1 only. Then 15%, instead of 15% you are writing a 15 only. Value you are taking, not percent. So like that you have to do the calculation. Value per share is 7.33. Now calculation of fair value of share equal to value per share equal to intrinsic value plus yield value divided by 2, that is 120 in earlier slide we calculated, and plus 7.33 divided by 2, that is 63.65 is the value per share calculated on the basis of fair value method. Okay. Now, so this is the 10 marks questions. Okay, next see the next question. So these questions appeared from the profit prior to incorporation, very easy chapter which is there in your syllabus. So this profit prior to incorporation, 2 sessions are available in my YouTube channel. There also you can watch other different types of problems. Okay. So Akash Company Limited was incorporated on 1/4/2023. Here in profit prior to incorporation, you should see when the company was started, when it is incorporated, and the financial year or calendar year. That you have to see. Then you have to decide whether how much is the prior period, how much is the after period. That you have to calculate. Akash Company Limited was incorporated on 1/4/2023 to take over the business of Anand Company Limited as from 1/1/2023. Balances extracted from the year ending 31/12/2023 were as follows. So gross profit 1,20,000, expenses, salaries and wages. You have to decide on the basis of time ratio what are the expenses we have to distribute, and on the basis of sales ratio what are the expenses are distributed, and which expenses are considered after only. So that you should know while solving this type of questions. Otherwise it is very difficult to solve it. So everything with the theoretical part I have explained in my other 2 sessions that are there in YouTube channel. So why again and again I am telling you people, if anybody not aware how you have to treat this as a after or before, so that every theoretical part is also explained in that class. So that's why I am requesting you students, if you don't know you can watch that videos also, otherwise you can share to your friends also. Okay. So direct fees, advertisement, audit fees, depreciation, all the expenses is given, and there is a loss, net loss of 6,000. So some additional information is also given. For this we have to make some working notes also. So sales for the first 3 months amounted to 1,60,000 and 2,40,000 for the next 9 months. So they are given prior period sales and after period sales. On this basis you have to calculate the sales ratio. This is the one step. Then rent was paid rupees 200 per month. So here rent and taxes 3,600 is there. In that rent is given separately and tax you have to make a separate. After that you have to make prior period and after period rent and taxes also. Then bad debts include 400 up to 31/3/2023. So prior period, before period you can say, or prior period bad debts is 400 and remaining will be after period only. So prepare statement showing profit or loss prior to and after incorporation. So in this type of questions, first step you have to calculate the time ratio. Second step you have to calculate the sales ratio. Then whatever adjustment is given, that calculation you have to make it, or you can make it a working note for that. So everything is covered in this session. So please go and watch the next slide. Student, I hope everything is clear. The audio, video, so everything is clear. So if any doubt is there, if any clarity is not there, you please communicate with me. So already you have completed 1 hour. So another 20 to 30 minutes, not more than 30 minutes. Any one problem is pending. Okay, that you will see. See, first calculation of time ratio. How you are going to calculate? Prior period 1/1/2023 to 31. Sorry, here we have to mention 31/3/2023. It is not 1. Please make a correction. It is 31/3/2023. It is not 31/1/2023. Students, please note this is 31/03/2023. That is 3 months, because the company was incorporated on 1/4/2023. So January, February and March. January, February and March is the prior period. 1, 2, 3. That is 3 months. So after period 1/4/2023 to 31/12/2023. That is 9 months. So ratio will be 3:9. That again I am simplified it for 1:3. Okay, this 3:9 again I simplified, 3 ones are and 3 threes are, that is time ratio 1:3. Then calculation of sales ratio. So prior period 3 months sales already given in the problem, that is 1,60,000. Then after period 9 months sales is given, that is 2,40,000. So in problem time ratios also they are given, how much is prior period and after period. Okay, so 1,60,000 is to 2,40,000, so ratio is 2:3. How much you can simplify, that much you have to simplify, then you have to calculate the sales ratio. So the next working note is allocation of rent and taxes. So total rent and taxes is 3,06,000. So in information they are given, rent paid for prior period is 200 per month, so total 3 months will be there, so that is 600. Then rent paid after is 200 into 6 months, sorry 9 months, sorry 9 months, that is 9 months you have to mention, it is not 6 months, it's 9 months. So total 1800. Calculation is correctly did it, but only you have mentioned 6 months, it is 9 months. So 200 into 9 equal to 1800 per month. So total allotted and remaining is the taxes that you are going to allocate on the basis of time ratio. So this is 600 and 1800, 2400 is rent, and whatever balances remains is taxes that you are going to distribute on the basis of time ratio. This is very much important point you have to consider. This working out you have to make. Then bad debts prior period is 400 and whatever balances remain is after period. So total is 1600. So this you have to mention. Then the statement you have to prepare. Okay. Now see the statement. Statement showing profit or loss prior and after incorporation. So this total you may put or you may not be put. Okay. Only thing you have to mention particulars, basis for allocation, before and after. So gross profit you are going to distribute on the basis of sales ratio, which are calculated in our previous slide, that is 2:3. So 1,40,000 into 2 divided by 5, 1,40,000 into 3 divided by 5, that is 56,000, 84,000. Then less expenses, salaries and wages are distributed on the basis of time ratio, which are already calculated in the previous slide, that is 1:3, that is 18,000 and 54,000. 72,000 into 1 divided by 4, 72,000 into 3 divided by 4, like that you have to make a calculations. Then rent, so actual working note number 1 I have mentioned, so there you have calculated, that is 600 and 1800, that is 2,400. Then taxes time ratio 1:3, 300 and 900. Then office expenses also you are distributing on the basis of time ratio, that is 6,000 and 18,000. Then commission on sales is based on sales ratio, that is 2:3, 6,400 and 9,600. Then advertisement sales ratio 2:3, 1,600 and 2,400, total 4,000. Audit fees on the basis of time ratio 1:3, 500 and 1,500. Then depreciation on the basis of time ratio 1:3, 2,000, 6,000, that is 8,000. Then interest on debentures you are considering after only, so that are considered in after session this only. Then director's fees, that is not direct fees, it's a director fees, that also are considered after only. It is given in the problem, sorry, it is given in the textbook, which are expenses should be considered as a after only. So you are not going to distribute before and after. So some expenses you are treating this is a after only. So in that interest on debentures and director fees are coming, so you are directly putting on after only. Then printing and stationery is based on time ratio. Then bad debts already shown in the working note, on that basis we are directly mentioning over here 400 is before and after 1,200. So total expenses is 37,000, 1,09,000. So net loss or profit, so before, so before there is a profit, after there is a loss. So total loss will be 6,000, but after distributing before and after, before period there is a 90,000 profit, after it is a loss. So this type of statement you have to make in the problem. So in profit prior to incorporation, what are the steps you have to follow? First step, you have to calculate the time ratio and sales ratio. Then if any information is given, that you have to make an adjustment or working note for that. So interest to vendors, that type of questions are also solved in my other YouTube classes. So there you will find around 6 questions on 15 marks and 6 to 9 questions on 5 marks questions. So that are already uploaded in my YouTube channel. So go and watch that type of questions also, or problems also, if you have in other question papers. So let's see the next question. So it is a theoretical question. So for your purpose, I mentioning the answer for this also, and I am not going to read out this. Oh, you please refer. If any students are interested to read the theory, so they can refer and make a note. So you pause it and make a note. Explain the statutory provisions regarding preparation of company final accounts as per Ind AS. So you have a chapter of final accounts. So how the final statements will be prepared account as per the Ind AS is explained in this slide. So you go through, and I am not going to explain it. These are the content. So you pause it and make a note. Okay. So last question, section D. You will take another 10 to 15 minutes for this. So after that, this session will be over. Students, please comment in my YouTube channel, and please share this video to your maximum friends so they can also get the benefit. So it is very helpful in while before examinations. So if you have a tomorrow or day after tomorrow, if you watch this type of sessions, it is very helpful to score good marks. At least 20 to 25 marks you can score better. Okay. So this is a compulsory questions. You don't have any options over this. So whatever compulsory 15 marks questions will appear, that you have to solve it. There is no option. Okay. So it is also very easy question appeared in 2024 based on valuation of goodwill. There are in super profit you have many methods. On that basis we have to calculate the good value of goodwill. So and valuation of goodwill also in different methods, different problems are solved in my other YouTube videos which are already uploaded in my YouTube channel. Okay, go and watch that. The following particulars are available in respect of the business carried on by a trader. Profit earned for the following 3 years, 21, 22, 23 is given. Then the normal rate of return is 10%. Average capital employed in the business is 3 lakh. Then present value of annuity of rupees 1 to 5 years, that is at 10% is 3.78. The profit included non-recurring profit on an average basis rupees 6,000. Okay. So on this basis of this information, you have to calculate. You are required to calculate 5 years purchase of super profits, annuity method of valuation, capitalization of super profit, comment on each of the above value of goodwill. So here what happened? You have to calculate the super profit. For that you need a average profit and actual profit. Okay. So how that has to be calculated, the information is given in the problem. So on that basis you have to do this all 4 solutions. Okay. See, first we have to calculate the super profit. For that, what are the things we have to do, that we are going to explain in next slide. See, calculation of adjusted average profit. First we have to calculate the average profit. So average profit 2021 given 44,000, 22 58, 23 48,000, that is 1,50,000. Average profit is 1,50,000. So sorry, total profit is 1,50,000. Average profit equal to 1,50,000 divided by 3 years. So total average profit is 50,000. In this there is an adjustment, non-recurring profit. Average non-recurring profit is 6,000. So that you have to minus it. So then you will come to know the adjusted average profit, that is 44,000. This is very very important adjustment. So average they are given. So directly we can mention average only we will took it. Otherwise 2021 44,000 minus 6,000, 2022 58,000 minus 6,000, 2023 48,000 minus 6,000, that type of also you can solve it. But here they have mentioned average, that's why in average profit only directly you are minusing the 6,000, you are reducing the steps. Okay. So then calculation of normal profit equal to actual, sorry, the adjusted average profit has come 44,000. Then you have to calculate the normal profit. So normal profit equal to actual capital employed into normal rate of return, that is 3 lakh in given the problem, then into 10%, that is 30,000. So our actual profit, average profit is 44,000, but as per the capital we have calculated normal profit is 30,000. So more than that, whatever you are earning, that is called a super profit. Super profit equal to average or adjusted average profit minus normal profit. The super profit is 14,000. So to calculate the super profit, these two calculations we have to make. First we have to calculate the average profit, then you have to calculate the normal profit. So normal profit information is also given in the problem. That is, you need a capital employed, then what is the normal rate of return. What is the normal rate of return? Okay. So students, maybe this portion my video may block it. I will explain. Okay, don't worry about that. Then value of goodwill. Value of goodwill equal to, as per first method, 5 years purchase of super profit. Value of goodwill equal to super profit into number of years purchase. So 5 years is given, 14,000 into 5, that is 70,000 is the value of goodwill. 14,000 into 5, that is 70,000. Then annuity method of valuation. Valuation of goodwill equal to super profit into annuity value, that is 3.78 is given. 14,000 into 3.78, that is 52,920. Then capitalization of super profit. Capitalization of super profit, there is a formula. Value of goodwill equal to value of goodwill divided by NRR into 100. So here 14,000 into 100 divided by 10. So 10% directly you can mention. Super profit divided by NRR also you can mention. So 14,000. So total 1,40,000. This answer is 1,40,000. 14,000 super profit into 100 divided by 10% NRR. So if you are not taking this 100, that 10 divided by 100, if you are writing that again 14,000 into 100 divided by 10. Okay, otherwise directly you can take 14,000 into 100 divided by 10, that is 1,40,000. So this is the very simple case study. So how you should know in this type of question how you should calculate the super profit. For calculating the super profit, you should know the average profit, then you should know the normal profit. Once you calculate super profit, only thing you have to apply the methodology. Okay, so this is the problem based on value of goodwill. Okay, so in fourth point they have mentioned, give the comment on this. Okay, this is the theoretical part. Comment on each value of goodwill. 5 years purchase. This method is simple but might not always reflect the actual earning capacity. So annuity method, consider the time value of money and provides a more accurate valuation. Capitalization method assumes super profit will continue indefinitely, which might be unrealistic. The goodwill of the business can be valued using different methods, each with its own assumptions and implications. The most suitable method depends on the specific circumstances and the risk profile of the business. So based on this, so you can comment. See, in both these three methods, so calculation of super profit having a more value of goodwill. So company will prefer this only. Okay, so you can make a comparison also. Sir, in calculation of super profit, the valuation of goodwill is more compared to 5 years purchase or annuity method. So we will go for the calculation of profit. So like that also you can mention in your comments. So not which I mentioned. So in your own language also you can mention. In 5 years purchase profit is very simple, easy to calculate, you can mention, and annuity method it is also very easy to calculate. Then capital super profit you should know the formula, and as per this the value of goodwill is more compared to other two methods. Like that also you can make a comment on this problem. So students, I hope whatever problems you have solved all are very easy. So I hope you enjoyed this session and it is very helpful to you all. So if you have any other question paper also with you, or if you have any question also which you feel it is difficult for me to solve, so you share in my WhatsApp number that is there in my this video also. So my WhatsApp number is 9902382395. So you can comment, and directly you can have some clarity to commenting on this video in my YouTube channel also. I am very much happy if you like this video, and please share as much as to your friends so they can also get the benefit of this video. So my intention is that to help all the students of Rani Chennamma University and other university also. Okay, please share. Whoever having difficulty in corporate accounting, please share my other videos also. All 5 chapters videos are already uploaded in my YouTube channel. There is a playlist of corporate accounting. At least 2 sessions are discussed for each individual chapter. So please go through that and enjoy the session. And again, I am requesting, if anybody is not subscribed my YouTube channel, please subscribe the channel. And whatever new videos I am making, the notifications will come to you. So please follow this YouTube channel. And if you have any questions, you can share information in my YouTube number also. Otherwise, you can comment. Okay, students, thank you for giving me your 1 hour 15 minutes to me. I hope I fulfilled your demand. 2024 question paper, full question paper is solved in this session. So students, thank you for having patience with me, and thank you for watching. Please, again I am requesting you all, please share this video to your other friends also. Thank you. So now we are going to stop the class. Okay, thank you everyone, thank you. And within 2 days we are solving 2023 question paper. I am working on that, so that also we will solve it same like this only. Okay, thank you.